Okay, hello. This is Economics Part 1 for Mr. Clendenning's class. And let's first of all talk about what economics means. Economics is the study of decision making coupled with time, resources, and money. So these things down here, people using their time, whether it's digging a ditch or sitting in an office, that is a resource. Another resource that comes into how what is being used could be like wind or gasoline or trees. Those are all natural resources. And the third one is money, so how we spend money. So it's the study of how we use any of these three things: our time, natural resources, or our bling bling. Dollar dollar bills, y'all. An economist is someone who studies economics. This is a magazine that looks at the economy, and it's called The Economist, right? So it looks at these big companies. It looks at how China is changing, how they're allowed to own property. It is making fun of people that generally are economists, people that study the economy and how they can be a little bit overweight. So an economist is someone who studies how we use our resources, or the decision making of using time, resources, and money. All right, two big terms: macroeconomics and microeconomics. The one I really want to remember, and then you can remember the other one, is micro, big microscope. So microeconomics is the focus is on a business and individuals. So we're looking at a small scale. You're looking at little things, right? Whether it's personal finance or the success of Pope's Hobbyland in Wausau or Polito's Pizza in Stevens Point, that is microeconomics. Macroeconomics, you can see from this picture, is more like a world or at least a country scale. So how is money being exchanged? How successful is the dollar as opposed to the euro or the pound or the yen? Okay, this is focused on a world or national level economics. Again, economics is how we spend our time, our resources, and our money. So macro, big picture; micro, little picture stuff, details. All right. Another couple concepts are really important is want versus need. We all have both of these, and so don't be confused by these two terms. You certainly have wants. You want to play on Facebook. You want to play Call of Duty. You want to buy Call of Duty. You want to go to the latest concert, okay? Those are all wants, and that's how you would spend your money within economics. So how you spend your money or your time or the nation's resources for things that you do not need or things that are just for enjoyment or help you out in life, more or less, that's a want. So think of the Apple computer. A need is an actual apple. So if you didn't have it, you would die, basically. So think about air, water, apples or food, right? And shelter is certainly one, because if you didn't have a home to live in, you could be eaten by bears or attacked by other people or, die of hypothermia. So decay of teeth, this would be apple, an actual apple. So the idea that if your teeth fall out of your mouth, that is a need. You have to take care of your teeth. Versus the decay of pocketbook, that's not as big of a deal. That's a want. Needs, again, clean air or just air in general, shelter, water, food, and then also relationships. So I'm not talking about needing to have a boyfriend or a girlfriend, but you need to have a family to survive. Everything else, if it's not one of those 5 things, is definitely a want. But I want it. Okay, so it doesn't matter if it is a pizza cutter or an oven or the latest and greatest Mustang. Those are all wants. What did we do before we had money? First of all, we bartered. Barter is the exchange of goods and services. So basically it's trading before money was used. I will give you a potato for the pair of shoes, or I'll give you 10 potatoes before the potato shoes. They did not use money, as you can see in this picture in the bottom right. So again, it's basically trading of goods. It's before there was money. What are the problems with bartering, or in other words, trading goods? Well, the biggest problem is how do you determine how much 5 chickens is worth, right? That value of 5 chickens is going to change all the time. Or how much is 3 shoes worth? I don't know how useful 3 shoes would be worth as opposed to 3 pairs, but how much is 3 shoes worth? Or a pile of lumber, or a horse, or a haircut, or a diamond ring, or 4 pairs of pants. You probably look at the diamond ring or maybe the horse and be like, that's the most valuable. Sure, and that's because you're putting a money value on it. But what if you were starving? Okay. What do these have in common? Shells, wheat, hides, and beads. What do they all have in common? They were all once used as money. And that's interesting. In shells and island countries where these things were valued, they use them as an exchange or a substitute for money. Wheat has been pretty commonly used as money because that's the most important thing in life. So they would use that as a standard for how much something was worth. It'd be worth, a bushel of wheat or a bag of wheat, okay? Or a bag of grain, they might say. Especially in Egypt, where grain was extremely valuable during times of famine, where people were starving to death, they would, the pharaoh would hold all of the grain, and that's how people were paid. For hides, Native Americans often use hides for trade, or they would always use that as the standard. It's worth 15 pelts. It's worth 15 hides, okay? And in a lot of other island countries and also within Native American culture, they would use beads. A lot of these are precious stones that they chiseled down and decorated and found, especially in China and Tibet, where turquoise and there are certain kinds of bones that are used as beads, and that would be used as money. Other things that are used as money is like sweet potatoes. In New Guinea, they use sweet potatoes as a standard, and the king of the village or the chief of the village would hold those sweet potatoes, and whoever had the most sweet potatoes or yams basically was, the boss. All right, there are 4 functions of money. One is it's a measure of value. So what is something or someone worth? So what is your time? What is my time in teaching you this worth? It's a medium of exchange. So rather than trading those beads or pelts, we just carry around the dollar bills, right? So I will buy with what I earned. So whether you're working at McDonald's and that represents time, then you can exchange that time/money for, well, whatever you want. Call of Duty. It's also a standard of future payment. So you know that in the future they will take the credit card. You know they will take the dollar bills. They may not want your chickens, especially if they have a lot of chickens, but you know that they'll accept the money. It's also a way of saving wealth. So chickens can die, sweet potatoes can go bad, so you can bank on it. You can save it up, store it up, especially if you put it in a bank where it's a little bit more safer. You know it's not going to go bad or go away. Okay, let's make a differentiation between currency and money. Currency is dollar bills and coins. That's it. Okay? It doesn't matter if it's Chinese dollars or Japanese yen or pounds in England or European banknotes in Europe or American dollars as all currency. Same with coins. They're all currency. Money does include currency. So it does include coins and bills, but it also includes, which currency does not, checks, credit cards, stocks, and bonds. Credit card basically is like a mini loan. You're constantly taking a loan from a bank or a creditor, and they're giving you basically a temporary loan, and as long as you pay it back soon, you won't be charged for it. If you don't, you will be charged usually a pretty bad interest rate. Checks is basically, it's a representation of your currency and transferring those checks over. Stocks is a little bit more risky because you're buying into a company. You're investing, you're putting money into a company. And if that company does well, you will make some money off of it. If your company does not do well, you'll make less. So it could be worth more than what you paid for it or less. A bond is like the opposite of a loan. You are actually buying into the government. They are taking a loan from you, and they are going to make money. You are going to make money off of them over time. So those are all forms of money. They're not all forms of currency. In fact, none of these pictures are currency, but they are all money. The only thing currency is coins and dollars. So is all currency money? Yes. Is all money currency? No, because currency is only dollars and coins, so is all money, and there's a bunch of forms of money currency? No, it's not, because checks is not currency. Credit cards are not currency. Stocks are not currency. Bonds are not currency. Inflation. Imagine a balloon is being blown up. It's being inflated. When prices go up and your dollar doesn't buy as much. Between the world wars, they had to use a wheelbarrow of cash in Germany in order to buy a loaf of bread. They would often use that paper or printed money or currency to start fires or as wallpaper before they would use it to buy because it was so worthless. That is extreme inflation, okay? So when your dollar becomes $1.50, it takes $1.50 to buy a loaf of bread instead of $1, that's inflation, okay? Or maybe $2, okay? So the dollar bill is worth less and less. It takes more and more. So maybe it takes $5 to buy a loaf of bread. Maybe in 20 years that will be the case. Right now you can get it for maybe 99 cents, sometimes less. Okay, deflation is the opposite. It's when prices go down. So when that dollar bill becomes more valuable, but that's because the prices are going down. So it goes down to $2, $1.50, $1. Okay? So again, when your dollar buys more, it's deflated. It has more value to it. It has less air in it. It has less, worthless things in it because it's just the balloon. It's just what's inside. That's the easiest way to remember it. Inflation, lots of air in it. It's worth more than it really is, or in other words, the prices go up, your dollar doesn't buy as much. Inflation versus deflation. So look on here. This is an old advertisement for food, and you can see some pretty crazy prices. 4 quarts, that's a lot of apples, for 23 cents. A pound of cookies for 23 cents. Toilet paper, 4 rolls for 29 cents. Coffee, basically a can of it for 49 cents, versus that would cost more around $10 today. So we're talking about 2,000% inflation. All right, goods versus services. A good is anything, basically, that you can buy or sell. So in a classroom, that might be a book or a stereo. When you go to the car dealership, it could be a motorcycle or the General, right? You could buy that from somebody. Or you go to the shoe store, you can buy shoes, right? If you're getting a haircut, things they would sell at the salon, for example, shampoo or hair gel, or maybe a hairbrush, or like those little things that come in, chapstick that comes in little jars on the side. Those would be a good. A service is when somebody does something for you and they charge you for it. As a teacher, I charge local taxpayers to teach their children English, and social studies, right? In this case, economics. That's the service that I charge. Police officers charge a service in exchange for keeping the community safe. Firefighters put out fires and they charge the public for it. Judges put people in jail or decide on what is right and wrong or what people should pay according to what they did, and that's what they charge for. Someone working in the salon cuts that person's hair. They're not selling a good, they're selling a service, right? They might also sell goods in the store, but what they are doing is a service. So giving someone a haircut is a service, not a good. Making somebody dinner, so working at a restaurant, the chef's job is to cook the steak or the stir fry. He is doing a service. Just like when your server or your waiter or waitress comes and gives you the food, you give them a tip for their service. All right, 4 factors of production you need to know. You'll notice government is not on here. Well, you need to produce a good, you need to have land, you need to have labor, people doing the job, you need to have capital, so in other words, money invested, and management, so some kind of person, some kind of structure. Let's just take something simple like growing rice. You have to have land to grow the rice on. You have people to work the rice field. You had to have some kind of capital, somebody to invest in the land, to buy the seeds, etc. Right? And management, how do you take that bag of rice and you sell it to the people down the street? Well, usually there's a middleman involved, okay? Somebody's going to sell it for you, or even if it's that person in a family farm managing it themselves. There's a deal of management that goes into it. Okay, today's vocabulary. A want is things we'd like to have, so not something for survival. It doesn't matter if it's a pen or a gun or a video game. Those are all wants. A need, something you had to have to survive. So food, water, shelter, things like that. Money can be used to buy. Anything that can be used to buy. So it could represent currency. Currency, however, is just paper and metal. Money, which used to actually represent gold. So again, money is a big general term. Currency is money. Money is not necessarily currency, okay? Only if it's paper or metal. More vocabulary. Barter, that's the trade for things. Inflation is when prices go up and then money loses its value. So the value of money goes down. Deflation is when prices go down, but money is worth more, so the money gains value. A good is a thing that can be bought or sold, like a desk or a pair of shoes. A service is when we do something and charge money for it, like me teaching you economics and charging your parents in taxpayer dollars. Okay, this is what the quiz will be on, so review this lecture.